Hey guys, you're back on the Money Mindset channel, where we always try to keep it real about money and how to make it work for you, while the big so-called pros try to fluff the information up, leaving you unsure. Let's talk about some life insurance.
Life insurance, the game where you only get paid if you pass away.
Let me tell you something most people never think about. In the game of life insurance, it only pays out if you're dead. Think about that. Companies don't bet on your life, they bet on your death. And for decades, they've been selling us a form of fear, dressed up as protection, wrapping it in comforting slogans and smiling commercials that make you feel like somebody's got your back. You've heard it all before. We're on your side. You're in good hands. Yeah, you're in good hands, all right. Their hands. Because the second you sign that policy, they start getting paid whether you live or not. Here's what they don't tell you. Insurance companies aren't these caring, community-driven angels they want you to believe they are. They're groups of investors, banks, hedge funds, and big corporate money. They pool your monthly payments with millions of others, and they don't let that money sit there. Man, how can a company let you pay a few dollars a month, but claim they will pay you thousands if you die? How can anyone afford to do that? It must be more to it than meets the eye. And it is. They got millions of people paying that monthly premium.
They couldn't run a company paying out with only a couple of people in the game.
They flip all that money they take in. They invest it in the stock market, in real estate, in government bonds, and they collect returns off your fear. Every month you pay them for peace of mind, and every month they turn your fear into profit. The profits don't go to you or your family. They go to shareholders, to executives, to the big money crowd sitting at the top.
To illustrate, MetLife, one of the largest in the game, reported a net income of $4.2 billion for 2024. This demonstrates the substantial profitability achievable within the industry.
So, while you're struggling to make sure your family will be okay if something happens to you, they're out here making sure their families will be rich whether you live or die. They're not in the death business, they're in the money flip business. Death is just how they measure the scoreboard. And it gets even deeper. They have actuaries, or so-called math geniuses, who run the numbers constantly, calculating life expectancies and mortality statistics. They know exactly how long most people will live, and they use that to make sure they profit more from your premiums than they ever pay out. Even if a disaster or pandemic happens and too many people die at once, they've got reinsurance companies. Oh yeah, that's insurance for the insurance company. These people are smart enough to also cover themselves too. Ain't that something? The game is set so that the house always wins. The only players taking real risks are the ones paying in. And my friend, that is you. Now let's break this down, because it's time to see the game for what it is. You've got a few main types of life insurance: term life, whole life, and the fancy ones like universal or index universal. Each one sounds different, but the mindset behind them is the same. They make more from your fear than you'll ever make from your plan. Term life is a simple one. It's like renting insurance. You pay a set amount every month for 10, 20, maybe 30 years. If you die during that time, your family gets the payout. If you live longer than that, the policy expires and you get nothing. All those years you paid, gone. That's why I say it's the only bet where you win by dying. And yeah, is that really a win for you? Heck, you're dead and won't see any of it. But if you live, they definitely win. Yet, term life can still make sense if you've got kids, a mortgage, or people who depend on you. The trick is you don't overbuy. Don't let somebody guilt trip you into a $500,000 policy while you're still figuring out how to make rent. Protect what matters, not what sounds impressive on paper. Then there's whole life insurance. This one sounds fancier because they say it builds value, it pays dividends, it grows with you. Sounds good, right? But here's the truth. They're just using your money to invest for themselves and giving you a tiny piece back. You could build more value by taking some of that same money and putting it into your own savings or investment account. You too can get your own interest like they are trying to do. Whole life is just expensive savings in disguise. Now, those universal or index universal policies, that's where they really get slick. They'll tell you it grows with the stock market, that it's tax advantaged, that it's perfect for building wealth. But most of those policies are full of fees and fine print that keep you locked in while they keep collecting. The only ones guaranteed to make money on those plans are the company and the agent who sold it to you. Let's talk timing, because that's another part of the game. The best time to buy insurance, if you really need it, is when you're young and healthy, when the rates are cheap, and your life expectancy is high. The worst time is when you're older, broke, or already sick. That's when they charge you out the nose, because now you're a risk, not an investment, and that's how they keep the profits rolling off of your timing, not your tragedy. So here's the question nobody asks. Why not use their own system against them? That's where the concept of self-insuring comes in. It means using the same playbook they do, but for yourself. You take that same $100 a month you'd hand over to them and instead put it into your own high-yield savings or investment account. That becomes your life fund. Over time, your money grows and you're the one holding the bag, not the company. If you invest $100 a month at a modest 7% return, in 20 years, you'd have over $50,000. That's real money your family can touch. No middlemen, no waiting on a claim, no begging for a payout. That's what the wealthy do. They don't stay insured, they stay invested. Now don't get it twisted, insurance itself isn't evil. It has its place, but the mindset behind it, that's where people get trapped. You can't let fear run your finances. They call it life insurance, but it only pays out when your life is over. So while you're still here, make sure your money's working for you, not for them. In this game, the real insurance isn't a policy, it's knowledge. And once you understand the game, you stop being the customer and start being the company. That's how you change your money mindset.